Last month, I made $11,517 from two accounts only. And in today's video, I'm going to give you the whole approach that I used to achieve these results. So without wasting any more of your time, these are the table of contents. So we'll be looking at weekly profiling, hourly order flow, New York Stock Exchange manipulation, and intraday profiling. Okay, so one thing I've noticed with ICT concepts is that they're very overcomplicated and they can be simplified to a very low level. Now, this is the no bullshit simplified approach that I'm going to share with you guys today. So, simply, we are looking for a manipulation above or below the weekly open, whether we are predicting a bullish or a bearish weekly candle. We are looking for price to trade into a higher time frame level. We are waiting for the hourly order flow to shift, and then we are simply looking for a very clear framework, whether that's an AMD, being an accumulation, manipulation, distribution, or a market maker sell or buy model. So here's a very rough diagram of what I've just explained, and we're going to keep it very simple. Don't overwhelm yourself. It will be a lot more clearer when we put it all together, right? So looking at Monday and Tuesday, price consolidates and we decline beneath the weekly open. We are simply viewing this as the manipulation in a bullish profile. Now, obviously, we can't see much from this diagram alone, but we're going to assume that Wednesday puts in the reversal, and this is the hourly time frame, then switch into a bullish order flow. Now that sets us up for Thursday and Friday to distribute towards the original consolidation of the market maker buy model. And that's also our checklist ticked off, right? So we have a manipulation beneath the weekly open into some sort of higher time frame level. The hourly order flow then shifts, and we have a very clear market maker buy model. Now, the next component of this model is the hourly order flow. Now, this is a very good filter, and you should always be trading in alignment with this. So, in a bearish scenario, you want to see highs being swept and up candles being respected. And in a bullish scenario, we're looking for lows to be swept and down candles to be respected. Now, aligning yourself with the hourly order flow usually allows the 5 minute or the 15-minute chart to expand, and it's usually a very high probable expansion. Again, very quickly, we're not here to waste time. This is a very nice example of hourly order flow. So if we begin from the left, you can see we are in a bearish order flow when we're on the sell side of the curve in a market maker buy model, right? I haven't marked the actual market maker buy model on here, but hopefully you guys can visually make out that this is the original consolidation. This run lower is the sell side of the curve, and this run higher to then clear out the original consolidation is the buy side of the curve. So beginning from the left, we run a high and we trade lower. Of course, we're on the sell side of the curve, so we're expecting a bearish hourly order flow. So up candles are being respected and we're trading lower each time. We then trade back into a series of up candles and we trade lower again, and we do that multiple times until we reach some sort of higher time frame level. We then get a switch in order flow. So now we're closing above down candles and we're respecting these down candles. You can see when price returns into these levels, they are very sensitive and utilized as order blocks, right? So that's our order block. This is a propulsion block price trades into, and we begin to expand higher. And again, this series of down candles here we utilize to trade higher. And if you look here, we also have a low being swept, which is completely normal in a bullish market. This is a great sign of aggressiveness. Okay, so now that we understand this very important concept, we can touch on the next component being the New York Stock Exchange manipulation. So here we are. Simply, New York Stock Exchange opens at 9:30 a.m. Eastern Time. Now, usually it's going to do one of two things. It's either going to manipulate the market or it's going to distribute in the market. Now, the way we are going to understand whether we are expecting a manipulation or a distribution is by understanding the hourly order flow, right? And this is going to give us a time-based filter. Now, me personally, the most high probable trades form when 9:30 manipulates, and that's the only thing I want you guys to be focusing on for this model. We are not going to be focusing on a 9:30 distribution, as I will not be teaching that today. And you may be wondering what's so relevant about this open, and we're going to utilize it to profile the intraday timeframes. Now, your intraday timeframes are going to be the 5 minute chart or the 15-minute chart. Me personally, I only trade futures and I love the 5 minute chart to profile the intraday. Now, the exact same way that we profile the weekly by looking for a manipulation and then a market maker model or an accumulation, manipulation, distribution, we're going to do the exact same thing on an intraday basis after the reversal has formed and after 9:30 has manipulated. And here is a very clean example of all of this being put together. So here we have a hourly high. I want you guys to assume this is a bearish order flow. For now, I know it's not the most clean example because you don't have context of the hourly time frame, but we are going to jump into a top-down analysis example afterwards. So you can see here we are in a bearish hourly order flow. So seeing a run above our hourly high, we should expect this to be a manipulation and we should expect distribution to the downside to continue the order flow. Now at 9:30, what happens? We get a spike above the hourly high, acting as a buy side liquidity manipulation, and then followed by a change in state of delivery by closing beneath these series of up candles. And then we simply return to this order block, the series of up candles. Remember the same concept I taught you about hourly order flow? This is the exact same thing happening on the 5-minute chart. This is not a bullish signature. We are seeing price close beneath down candles, so we can refine it to this larger body one, and then we return into this level and we get a sell off, clearing that original consolidation, profiling the intraday exactly how we did with the weekly. Okay, so hopefully I haven't lost anyone yet. This has been a very brief, concise example. Now we are going to do the real work and do a top-down analysis live on the charts. Okay, so here we are on the charts. I'm going to go straight into an example. Now, for this current week that I am displaying, we're just going to say that I have a bullish bias. This video is not for me to touch on how to derive your bias in depth. You should understand whether the weekly candle should print higher or lower simply by reading the candles and the PD array surrounding it. So you can see price has dipped into some sort of higher time frame level here, this grey box. Now, this is a weekly gap. I will mention that. And this is the previous week's low. Now, we understand that the previous week's low and the previous daily lows, they usually hold significant liquidity. So seeing price dip beneath them, it is not uncommon to see a reversal following that, right? So what we understand is that this is currently Tuesday. We've traded into a higher time frame level after running the previous week's low. And if you play this out a bit, you can see we begin that reversal. Now, please pay attention to this. Running highs, closing beneath up close candles, and then trading back into them, respecting them, and trading lower. This is a bearish order flow, right? And you can see the bearish order flow, it continues to happen all the way here. And then what happens? We now close above down close candles, right? This whole series here, or this one in specific. Now that is your change in state of delivery. And that is the first sign of a reversal in the market. So if we just mark that out. Okay, and now we also understand that this here on the hourly is a market maker buy model. Now it is a bit compressed on the hourly, if I'm being completely honest. If you look on the 30-minute, this will be a lot more cleaner. You can see we have that consolidation, and then we have the breakdown. This is the sell side of the curve, and then this is the smart money reversal after running the previous week's low into our key level, and we get that displacement to the upside, and we then switch order flow, confirming a reversal. Now, what this means is this is likely low of the week, and we have our manipulation beneath the weekly open. So we can now look for higher prices, targeting the opposing side of the range, also known as the market maker buy model original consolidation. So if we play this out to the next day, and we can see how we can get involved. So we want to go to 9 a.m., right? Okay. Okay, here we are at 9 a.m. I'm just going to replay this so we don't miss the move. So what we can see is this a bullish order flow? Well, very clearly, right? Because we're now respecting these down candles, whereas before we were respecting these up candles. Now, in a bullish order flow, we understand that these candles here should be respected. So we'll put that in a grey box. And we also understand that lows can be run as long as we see some sort of immediate response and we don't start trading too deep. If we begin to close beneath this low and then start to form a bearish order flow on the lower time frame, that is the first sign of a reversal, and that is not favorable. We want to see price dip beneath old lows and show some serious immediate feedback that it wants to trade higher. So we have this as our level, and we also have that nested within these series of down candles. So we can now go on the 5-minute chart, our intraday time frame, and this is where we will profile the intraday. So when I talk about profiling the intraday, we are only going to focus on this area here, right? Simply the current day. This is the range we are trading within. We don't care about anything to the left. We don't care about Monday. We don't care about Tuesday. We only care about Wednesday. So I'm going to delete the weekly open to clear this up a bit. And we can delete this blue line also. And we're going to play this out until 9:30. So you can see 9:30 opens and we immediately run lower, running the sell side liquidity. Now, if you look here, the exact same way that we just profiled a weekly, we also have another market maker buy model, but this time we are profiling the intraday time frame. So you can see we trade lower, and this looks like we're beginning to get some sort of reversal. Now, once this reversal is confirmed by price closing above these sort of thick down candles, if we can draw this out, then this validates our market maker buy model, and we can target this high here. So let's play this out. And you can see we actually get a very nice closure above the whole series of down candles. So once we get this, you can simply set your buy limit here. That's your confirmation. And that's proof that order flow has shifted, because we understand in a bearish order flow, we should not be closing above these series of down candles. So that now tells us we are in a bullish order flow. Now your stop can be beneath this low. You always want to aim for at least 2R with this model. So somewhere around here. And we'll simply target the original consolidation. And I'll put my stop at this candle low. So that gets us to R. And if you play this out, you can see we trade back lower and we get that immediate feedback and we've run the high for a very simple 2R. And that is a textbook example of the whole model. Now, I hope this video has been very helpful for some of you. If there was anything that was unclear, feel free to reach out to me, whether that's through Twitter DMs or in the description, you will find a link to my free Discord where I am active all the time and I am giving out help for free. If there's anything you would like me to touch on, please leave a comment and I will make a video on that next time. Thank you guys for watching and I will catch you in the next video.